Hello, good afternoon. So I'm the only one remaining between lunch and you, and I don't want to take too much of a time. Uh, so, over the next 10 minutes and probably 8, I just want to leave you with two important thoughts which you will discuss over lunch, because these are thoughts, that we see at the exchange, and I think, the PMS, the wealth, and the AIF industry that you have here, this is going to be very relevant because this is a trend that we're seeing over time. Now, you all know about NSE. Uh, we are the largest exchange, multi-asset exchange. We've been there for 6 years in a row. We have been the first to do a lot of things. But I'm not going to talk about equity because that is the equity segment. What I'm going to take from this slide is that the exchange as a market infrastructure institute plays a very big role in terms of developing a segment. And while equity is a bread and butter and the talk of every dinner table or lunch table, two segments, which is the commodities segment and the debt segment, are the segments which are going to see a bigger increase in the times to come. And that is the role that we are playing to develop those markets. Now, I'll not get into why you should trade commodities on NSE or why you should trade, other asset classes on NSE. But what we are trying to do here is give you a common platform where you can trade any asset class that you want and generate that alpha for you. And generation of that alpha, that we've done in commodities is something on electricity. So electricity was one market in India which was not transparent. We've seen so many discussions happening over time in terms of how the PPAs happen. But there was a need for us to have the electricity markets trade on the exchange because there was no transparency. And we've launched it this year. And the bigger transition that we've seen is that both the producer, the generator, the transmitter, and even the end user is now beginning to use the reference price of electricity in their contracts. Now, why is it of any value to you is because electricity is a very big market in India. The reference price is not driven by any other exchange globally. It's determined locally. We are going into a phase where we will generate more excess electricity, but because there was no market for any hedger or any producer to hedge, he was not producing as much as he should. With this market, you have all kind of participants who are coming in, and here we have almost 80% of the market share. Now, just to give you a context, NSE has always been debt or equity driven exchange. Commodities has not come to us from the very start, but we have launched commodities as other platforms were not stable. Now, the way we look at the commodity segment is that while commodities is the second most traded market globally, India, it is very small. And with a platform like NSE, we have almost 120 million users. We have almost 99% PIN codes covered from users. This can actually go to a very, very different scale of usage. And one, I was talking about electricity. Second is in terms of the whole, energy basket per se. And, we have something on crude. We have recently changed the way the contract trades. We are not the leading exchange in crude, but given the platform, the stability, the reach, and the benefits that accrue to you with one, stop solution for executing your trades, that is something that we are trying to achieve with crude. We have seen, the volumes go higher, and similarly, we've also seen the engagement on natural gas. So from that perspective, if you are looking at commodities as a segment, these are the commodities that think we will grow. And in all these commodity basket, we have participants not only domestic, but even foreign participants, and from almost all segments of the market. So whether you call it a producer, whether you call it a hedger, you call it a speculator, or you call it a normal participant. So we have all of these. So that was on commodities. So I would want you to just take one thought. Commodities is going to grow big. That is how we see from the electricity futures that we've launched. The other important product that you should, and the segment that you should think about and take with you, is on fixed income. And this is where we are seeing a lot of disruption happening over the last 1 year. We have something called an RFQ platform. It's a request for quote platform. Probably a year back, you were having about 500 trades a day. Now we have 17,000 trades a day, which basically means that there is a lot of retail participation which is happening on the corporate bond side. So we can trade corporate bonds, we can trade G-Secs, we can trade treasury bonds. Everything can be traded on the RFQ platform, and there is a big offtake that is happening here. This is also important from a prospect that while equity is the core of your portfolio, there is a diversification that can be done on the fixed income side beyond the G-Secs, and the growth that we're seeing here is phenomenal. Similarly, if you want to have an exposure on the interest rates, you want to have an exposure in terms of a view, you can use our interest rate futures. Now, these are something where we are seeing a lot of traction from participants like banks, brokers, PDs. I think from the investor set that you cater to and you address, I think this is another important segment that you can participate. Now, we all say why debt doesn't work, and why does it work in the G-Sec world? Because you can repo it, right? Similarly, what we have done is we also have something called a repo market. Now, why this is important again is because it becomes a funded trade for you. So what it means is that if you have exposure to corporate bonds, if you have a portfolio of corporate bonds, you can generate some extra alpha if you use the repo market. Now, repo market is simple. If you hold corporate bonds, you can basically lend it in the overnight market. What we've seen is here again, probably we had volumes which were pretty minuscule about a year back. But now with the participation of mutual funds, banks, PDs, we have seen a lot of volume that has kicked in. So if you hold some cash in your portfolio, or rather I would say some bonds in your portfolio, you can convert that cash into bonds, and then you can use those bonds to repo in the market to generate that alpha. Given that we are at NSE and we have a lot of proprietary data, we see these trends emerging in a big way. So again, coming back to these 10 minutes that I took for you, over the lunch, I have my team here who can tell you more about how to use these products, what kind of products can be used, and you can reach out to them. But do consider these segments, very important segments, and I think you will see a phenomenal amount of growth in the times to come. Thank you.